Good evening, everyone. Welcome to our 9th webinar in the Feeling the Joy series. Many of you would have been joining us for these sessions every month, and we say thank you so much for your commitment. We look forward to hosting you every month, and I know FHC is in your diaries, in your calendars, and of course, you have FHC in a special place in your hearts. For those persons who are joining us for the very first time, a very, very big FHC welcome to you. We hope you'll find today's session very informative as we continue with our New Habits series. I am Juven Montague Anderson, Assistant General Manager of Marketing Communications and Member Experience here at FHC, and it's a pleasure for us to have you with us this evening. Once you're on this session with us, you are family. Welcome to you all. But before we go into our webinar this evening, I am going to invite Miss Janet Richards, Manager of our St. Thomas branch, to open in prayer for us. Janet, over to you.
Thank you so much, Juven. Good afternoon, all. Let us pray. Father, we bless your holy name and thank you that this afternoon we are able to host our 9th webinar, Feeling the Joy, Smiles and Happiness, information to transform the lives of our members and our friends. Lord, we thank you that our host and our presenters, they have come this evening again to keep us informed, to give us additional information that we can make plans for ourselves and our families. We thank you that First Heritage has moved out into the atmosphere and is making the way, charting the course for us to keep informed and in the know. Lord, we thank you that this evening as we come again, we say, Lord, have your way. We say, let your information be clear and let us leave the session being much more informed. We just ask for your blessing and your guidance upon this session. In Jesus' name we pray. Amen.
Thank you so much for that prayer, Janet. Thank you. Thank you.
You're welcome.
Today's topic is peace of mind through insurance protection. A very, very important topic. And you know, peace of mind, we all want and we all need to have and ensure that we have peace of mind. So today we're going to be exploring peace of mind through insurance protection. And we have some very well and able and very competent presenters who will share with us this afternoon. But before we actually start, I am going to ask our CEO, our Chief Executive Officer, Miss Roxanne Linton, who she makes it a point of duty to be on all of our webinar sessions. She has never missed one, and we are grateful for that. And of course, you know, in the true FHC spirit, she's gonna come and she will welcome and she will tell you all the nice things you need to hear. And she will encourage you. She's our Chief Encouragement Officer. That's what we call her at the office. Not Chief Executive Officer, although that is her title. We call her the Chief Encouragement Officer. So we're going to ask Miss Linton to come now and share with us and to give you the big bright smile and the big bright happy FHC welcome as she joins us. Miss Linton, welcome.
Thank you, Juven, for such a warm welcome. You know, we see each other every day, but I mean, it's good when you can still affirm and greet your colleagues as we do in our FHC family. So thank you for that very warm welcome. And pleasant afternoon to everyone on the call, our dear members, board representatives and volunteers, members of my executive team, members of the management team, and of course, our broader team member population, our guests who are here to share with us, and everyone, our FHC family and friends. I really want to welcome everybody to this, our 9th webinar. We were one of the first organizations, I think, to adjust and adapt to this virtual way of communicating, because we could not afford to be disconnected with our members. You know, we consider our FHC family as a very integral part of who we are, our members. We have the mantra, member at the center, that we try to live. And so we had to find a way to keep this connection going despite, you know, being socially distanced. And so I'm happy, I'm really delighted that we have continued this initiative. We're at webinar number 9. And for 2021, we are in the series about habits, you know, and it's Jack Canfield who says, he's a known author, who talks about habits determining your future. And that's something I believe in. Each day, those micro practices that you engage in will determine the kind of future that you have. And so, you know, we have had, since the start of this year, we have had a webinar on, you know, how do we borrow wisely? We had a webinar around savings and budgeting. And today, another key pillar in any kind of strong financial management plan is, how do you manage the risks that we all face in life? And how do you protect yourself through insurance offerings? And so I really am going to put it out there, the last webinar, I put it out there that anyone who is on the call, who has attended all 3 in the series, Juven will have a grand prize for you, because that does show the commitment to 1, learning, and 2, to wanting to build and deepen, you know, better financial habits. So we do want to reward that. Another thing I want to just highlight is, you know, in addition to the member at the center, what a webinar like this also tells you about the FHC family is that we're committed to financial education. It's something that's very important for us, that our members get to understand how to build strong financial habits and how to manage their financial lives so that their financial ambitions and goals become reality. So we're your key financial partner in that quest for you to really realize your financial dream. So we're here for you on that front. And of course, just the third point I want to just highlight for this evening is around partnerships and collaborations. And at FHC, we also, you know, value and honor our partnerships. And, you know, through ICWI and CUNA, we've had various business partnerships that have worked well for us as we find, you know, try to determine the best ways to be able to serve our members well and in a holistic fashion. So I want to thank my colleagues from, you know, ICWI and CUNA for just the partnership and for being here to be a part of this webinar. Members, I know, you know, Juven and I and the team, we know that you could have been anywhere this evening, you know, but you're present with us, and we don't take that for granted at all. And so we thank you for being here this evening with us as we gather as family and, you know, learn about how we can get better and build better habits financially. So we're happy you're here. Do enjoy, and great seeing you again. Thank you very much.
Thank you, Ms. Linton. Thank you so much for that. Before I introduce to you our first presenter, just some ground rules. We will take 2 questions at the end of the first presentation. Those questions, we will ask you to just put them in the chat, and we will take 2, have some engagement going, and then we will go into the second presentation, and then we will take questions at the end for that presentation. Then we will come back together and we will do general Q&A for both presentations. So I'm going to ask you for all the questions that you have as we go through this session, just to put them in the chat. And I'm hoping that before it's curfew time, long before it's curfew time, we'll be able to get through all of those questions. But we're hoping that you will engage the presenters and you'll ask all the burning questions. If it's a case where we can't accommodate all of them this evening, I am sure that we will have the answers ready for you and get those answers to you. So at this time, I'll introduce to you our very first presenter. And our first presenter comes to us from ICWI, Insurance Company of the West Indies. And she is Janelle Chang, and she's the Business Development Manager. And we have a very good relationship with ICWI and with Janelle. Janelle travels to basically all of our locations. And, you know, she visits and she makes sure that the partnership that Ms. Linton made mention of earlier is working. So Janelle has over 19 years. She has been in the insurance industry, general insurance industry, for approximately 19 years, and she has experience in underwriting personal lines and commercial risks, overseeing the customer service operations at ICWI's head office, as well as property damage and personal insurance injury claims. She also assisted in the recovery efforts in Cayman after the passing of Hurricane Ivan. I'm sure you all remember what Hurricane Ivan did to the Cayman Islands. It devastated that country. Janelle also conducts workshops and seminars for the ICWI staff members covering exclusions under motor insurance policies, ICWI's homeowners policy, and ICWI's products and services. And Janelle is here with us this evening to talk to us about peace of mind through insurance protection. Welcome, Janelle. You're no stranger to us, and I present to you Janelle Chang from ICWI. Over to you.
Thank you, Ms. Montague, and thank you, Ms. Linton and Ms. Coley. Thanks for that warm welcome. It's really a pleasure to be here. I always get excited when I get invited to these things. It's my first webinar, so I'll try to do my best and really get the information across. As Ms. Montague said, we have a long-standing relationship. It spans almost 10 years, and in that time, we've seen the relationship grow. We keep up the relationship through the visits, like Ms. Montague says, and our portfolio for FHC customers and employees has been growing. So we're very happy about that. Working in general insurance industry means that we offer all types of insurance policies except for life and health. So I'm going to be touching on a little bit of that. I'm going to keep it short and sweet because we don't want it to be one of those workshops where all you're doing is listening. I want to try and keep you engaged. All right, so we're going to touch on a few things that would be, I think, you can relate to more. So first things first, why do we insure? So I think that there are possibly three reasons why we insure. The first reason is that we are sometimes required by law to insure. So say, for instance, you're purchasing your first motor vehicle, you'll find that in addition to your registration and your fitness documents, you have to have insurance as well. And this insurance must be minimum third-party liability coverage. That means that if you're involved in an accident and you're at fault, if you are in an accident with someone else and you've damaged your property or you've caused some injury, your insurance should be able to cover them to an extent as required by law. Now, that is called act coverage. We don't offer act because we find that that is a little bit too minimal in terms of coverage. So what we do is offer third-party coverage, which has better limits of liability. That is a maximum that will pay out if there is an accident. Just a moment, please. Sorry about that. All right, okay, so the next reason that people insure is because you're required to do so by your lending institution. So if you're taking a loan to purchase a motor vehicle or to purchase a home, your lending institution, your bank, who is lending you the money to purchase the home or the car, they're going to require that collateral to be insured so that if anything happens, the insurance policy will pay out, like if there's any loss or damage to the motor vehicle or to the home. And the third reason that I like to talk about all the time with my customers is peace of mind. Now, you can have insurance, right, on your car, but you need to know what type of, what level of insurance you have. Yes, you have comprehensive cover, but what is really included in that comprehensive cover? Sometimes you ask for, the lowest price, and you're actually cutting down on the coverage that you're actually getting. So I'm going to touch a little bit on some of the things you can do to really increase the coverage and kind of make you more aware of.
Okay, I think we probably have lost Janelle. I think we probably have lost her. I'll just pause a little bit. Let us see what the challenge is.
She's coming in, Joanne. She's coming in.
Thank you, Carlene. I think we lost Janelle. Please bear with us. We are in an age of technology and these things do happen. So here she is. Janelle, welcome back.
Apologies for that. If you saw me get a little distracted, I think something happened to my cord, my power cord, but I'm good now. Thank you. All right, so sorry. All right, so let me just share again. Okay. All right, okay, so we were actually looking at the final reason we insure, which is a peace of mind. So when you're purchasing your first car, you want to know that when you take it on the road, you're feeling secure, that if anything were to happen to it, that you are covered for your car, if you're interested in doing that, because in that case, it would be comprehensive cover. But more importantly, you want to make sure that you are not called in if you are involved in an accident where you cause some injury or damage to other people's property, right? So that would be the third reason I think we insure. The next thing I want to go to is car insurance, right? You have a number of different policies, and these are the policies that we offer. The first one I think is probably the most common one is a private car policy. This is where you use your vehicle for social, domestic, and pleasure purposes. So in addition to going to the shopping mall, going to the supermarket, even if you're going to work, coming home from work, that is covered. If you have a job where you travel for work, that is a bit of business use coverage. That's also private car coverage. And you'll find that of all of these, the private car policy is usually the more reasonable of all of these. The next one is private commercial. Now, these are vehicles that carry goods, but goods belonging to the policyholder. So if you have, say, a hair salon, and frequently you will need to take, what do you call it now, like nail polish, towels, anything related to the business, to and from the stores, you'll get the private commercial policy. Public commercial is a little different in that you're actually carrying goods, but these goods belong to someone else. So you'll have a contract to carry the goods and you're paid to carry those goods. The next one is PPV, and that stands for public passenger vehicles. Now, if you have a vehicle that you're actually paid to carry passengers, those will be your PPV policies. And we do quite a number of these PPV policies too. Rental, if you are interested in renting your vehicle to someone else, that is pretty popular now, and we've been doing quite a bit more of these recently. For small businesses with 4 or 5 vehicles, larger rental fleets, we have the largest rental fleets in Jamaica, which are Island Car, a number of them budget. Or also, if you have a single motor vehicle, maybe you want to attach it to your Airbnb, we actually do that as well. And of course, motorcycle speaks for itself. Sorry. So the types of coverage that we have too, as I had said, was third-party coverage as the minimum that we offer. It would be interesting to tell you that for third-party policyholders, you can actually purchase riders that will give you some additional coverage. Like you can purchase windshield coverage, or you can add on roadside assistance. We have a really nice roadside assistance program, so that if your vehicle breaks down or is involved in an accident and it can't be moved, you call a toll-free number, and it's 24 hours a day, 7 days a week, island-wide. So that's a nice rider that can be added on. And you can also add some medical coverage too, if you like. Third-party fire and theft is a step up from the third-party policy in that, yes, you're covered if you're involved in an accident where you are at fault. We will pay out to the third party for injury or their property damage, but also there's an element of fire coverage. So if the engine catches on fire or if the vehicle is stolen, there's coverage for that. And then comprehensive coverage now is encompassing. So it will cover the vehicle itself as well as third parties if there's an accident or a loss. And all these 3 types of covers they have their own riders. And the next thing we're going to talk about is a bundle that has a whole range of riders. So I get to talk a little bit about these things. It's called our comprehensive complete bundle. We have an ad rolling out now. Let me see if it will play the sound.
Janelle, we're not hearing it.
Okay. Oh, that's all right. Okay. Well, I can send that out later on to you, but you should be seeing it on TV soon. So it's a brand new ad that we have out. This is our e-flyer about the rider, and I'm now going to touch on the individual riders that are covered under the comprehensive complete bundle. The nicest one, I think, is one called accident forgiveness. You might have heard this before. When you're driving for a number of years without claiming under your policy, insurance companies give you a bonus, right? So after the first year, normally we give you around a 20% discount. This is called your no claims discount or your no claims bonus. And when you go on to your second year without claiming, it goes up to maybe around 30 or 40. And then when you reach about maybe 4 or 5 years, you hit the maximum, which is probably about 60 or 70%. Now, you really want to protect that no claims discount, because can you imagine 60 or 70% off of your insurance is huge, and just one claim, whether you're at fault or not, can actually remove it or reduce it. So this rider here protects your no claims discount just in case you have to claim. Now keep in mind, you have accidents where you're not at fault, like you have hit and runs, or you might drive through some water and then suddenly the engine is giving some trouble. So in that case, your no claim is always protected no matter what is paid out in a claim. That one's great. The next one I love to sell is capped excess. Now, what is your excess? It is that portion of every claim when you're claiming under your policy that you have to find yourself. It's like your health insurance, where you have to find maybe 20% and the insurance takes care of the other 80%. Well, with car insurance, the excess is anywhere between maybe 3.5% up to even 10% of the value of your car. So if you have a high value vehicle, say you have a $4 million vehicle, your excess could be $200,000. Now, I don't know how many of us have $200,000 in our pocket to just pull out to start off a claim. But with this capped excess, it actually reduces your excess to $50,000. That's a nice thing about this bundle. It has all these important things that will make your claims process so much easier. The next thing with this bundle is that if we find that you were not at fault in an accident and we can recover from the other insurance company, your excess is waived altogether. So you don't have to, it doesn't cost you to claim under your policy. And that one is called the excess eliminator, by the way. The next thing is that you get 2 weeks rent a car, up to 2 weeks. While your car is in the garage being fixed, or say for instance, your vehicle is stolen, at least you have another vehicle to get around. Another thing is that you have some additional death and medical expenses cover. And usually comprehensive policies give you a certain amount, maybe it might be about $100,000 to $300,000. For death coverage, well, it gives you an additional $500,000 with this bundle, and it gives you an additional $50,000 over anywhere between $50,000 and $100,000 that is standard under the comprehensive policy. The uninsured motorist protection is really nice because we are finding, I mean, from time immemorial, is that how you say it? There's just so many uninsured persons on the road. And at one point it was 1 in 3, another point it was 1 in 4 persons. And what happens when someone hits you and they're not insured? There's no one to claim from. And so you have to claim from your own policy. In this case, your no claims discount is protected and your excess is waived. Road angels actually get this free. So all the ladies who own their vehicles and drive it, this is something that is free for road angels, along with a whole host of other things as well. And finally, key replacement. Now, the keys for these fancy cars now are very expensive. So the insurance covers up to $50,000 if your key is lost. So moving on, I want to talk just a little bit on property insurance. And property insurance covers you for any insured peril. What is an insured peril? It's an event that can cause some loss or damage to your home or your contents. So some examples of insured perils are fire, hurricane, earthquake, flood. It's a whole host of them. You'll find all of them in the policy that we send to our customers, but it's far more than what I just listed. And underinsurance, underinsurance really caught everyone's attention during Hurricane Gilbert, or right after Hurricane Gilbert. Was that 1987 or 88? And that is when we realized the sheer number of customers who were underinsured. Now, the sum insured on their home policy should be the cost that it would take to build the home from scratch. And we were finding that customers, in trying to get the premiums down, they were underinsuring the homes. The problem with that is that the average clause will apply. Now, what is the average clause? All it is saying is that the proportion of the home that you have insured is a proportion of the claim that would be paid less your excess. So say, for instance, you've insured half of the home, like it takes $20 million to build your home from scratch, but you've only insured it for $10 million. Then it means that if your roof is lost after a hurricane, then it's going to be half of that cost to fix it that will be paid. So if it's a $3 million roof, you're only going to be getting $1.5 million and then less your excess. So it's so important to insure for the true building cost of the home so that when you're ready to claim, there'll be no issues. Taking a look at some of the property policies that we offer. First off is our residential policies. We have our homeowners insurance that covers all your private dwellings. It could be homes, it could be apartments, it could be a townhouse. You'll find with apartments, insurance companies have a little issue insuring individual apartments for peril cover. But what we generally do is we can insure it if the entire strata is already insured. So we issue a kind of secondary insurance. Residential strata now is where we will insure an entire strata if there's like a gated or ungated community. Commercial risks now, we will insure those under a fire and allied perils policy. So those would be like offices, warehouses, factories, or you may have like a shopping plaza or a mall, and we'll insure that under a commercial strata. You might have a short-term rental. Maybe you might have a second home that you put up on Airbnb. We do that type of coverage too, and the cost is pretty reasonable as well. And then you have our contractors all risk policy, which covers construction sites. So you know that your site might be at risk during the hurricane season, so you don't have to worry. Everything is safe with this type of coverage, as well as the equipment and the materials that are stored there. All right, we have some other policies too. Oh, there's so many of them. I listed just a few here, but if you're a business owner, some of these things here you would be required to get, such as the public liability coverage. Public liability coverage covers members of the public who may come to your business place and they're injured as a result of something that is happening there. Where the company is deemed to be at fault. So for instance, if some water was spilt and it wasn't cleaned up immediately and a customer came in and had a slip and fall, then the public liability policy would pay out. And employer's liability is similar in that it covers the employees of the company. Again, the company must be deemed to be at fault, and the injury must happen while the employee is actually doing his or her job. So an example of that would be maybe if the company did not supply proper hand protection, maybe helmets while they're doing their work, and there's some injury to the fingers or to the head, then the employer's liability policy would pay out. Another one is cash in transit. So you might want some coverage while the cash is being taken between your locations or maybe to the bank. So if it is stolen at that time while it's in transit, or if maybe say the vehicle turns over and it's damaged, that is covered as well. It's also covered while in the hands of salesmen or in the workplace as well. Burglary coverage speaks for itself. If your goods or your contents are stolen from a business place. Goods in transit is similar to cash in transit in that your goods are covered while moving from location to location. And finally, loss of profits or consequential loss. If your company, your business place suffers some kind of damage due to an insured peril, then sometimes your revenues are affected. And this is where the insurance policy, the loss of profits policy, will kick in and help the policyholder through that period. So that is kind of a quick review of all the policies that ICWI offers. Like I said, there are a number of them, but these are the more popular ones. That is it for me. I'm looking forward to the questions. Thank you, Ms. Montague.
Okay, thank you so much, Janine. Are there any questions? Remember, you can place your questions in the chat. Let us see if we can take 2 questions before we actually go to our next presenter. Are there any questions? Everybody's happy with insurance? The insurance that Janine spoke about earlier? Let me see if there are any questions coming in the chat. No questions as yet? All right, so what we'll do then.
May I make a comment? Juven, may I make a comment?
Go ahead, please.
Yes, I just wanted to endorse some of what Janelle said. I am a customer of ICWI. I'm a road angel. I have benefited from the accident forgiveness. There was an accident where I was at fault, and because I had built up good reputation, I was able to benefit by not having my premiums increase after the accident. Also want to say a little plug for the one that you cap your excess.
Yes.
What you call that again? What is it called?
Oh, it's capped excess or excess buyback.
Okay, the capped excess. I bought a Mercedes-Benz and somehow that was not sold to me. And I had an accident. And the excess I had to pay was about $300,000. And immediately by the next year, when when I was insuring, I made sure to cap the excess at 50,000. So in the event that I find myself in that position again, my portion that I would have to pay would be the 50,000 and not that exorbitant amount. So I learned that lesson the hard way. But I'm just saying it for all the persons as a living and true example, all the persons who are listening, that is something that you absolutely should consider to cap
Thank
your
you.
excess.
Marcia, thank you so much. What we've done, we put it on the proposal form, that form you complete when you're taking out the policy. All the riders are listed there. So we know that each one is properly explained when you're taking out the policy. We made sure to do that. Based on feedback like yours, I appreciate it.
Okay. We have another question, and this one is from Andrew, and he is asking, do we need to get a green plate for the private commercial?
So we don't require a green plate, but you'll find that you might have a bit of hassle on the road by the police. So if you're a small business owner, we generally let you just go. We issue the certificate of insurance with your private plate. But once you upgrade to your, we call it CC plate, but it's a carrier plate, and get your carrier's license, then you usually get the green plate as well. But we don't require it.
Okay. Janelle, one other question. Home and contents, the contents of your home. Can you speak a little bit about that? Because oftentimes persons think that just the structure they should insure and not necessarily the contents, the furniture, the appliances, etc., the wedding rings, all of those things, even the spectacles, all of those things that they should probably put together in a policy. Can you just address that, please?
Yes, sure, of course. Okay, so the coverage that you have on your home, you can get the similar coverage on your contents. So fire coverage, hurricane, flood, earthquake, that is the full perils coverage. But you can also step it up a little bit and insure it all risks as well. And what is all risk? That is where you can take your property outside the home and it is covered there as well. Or if something falls from you, like if your phone falls to the ground, then it's covered for accidental damage too. So you have the perils coverage and you also have the all risk coverage. Now, like what Ms. Montague is saying about your jewelry and your eyeglasses, I would suggest now you get the all risk coverage for that, because you get the perils plus coverage while it's outside the home, or if it falls from you and breaks. So yeah, it's a little bit more expensive to cover for all risk, but hardly, barely much, a little bit more.
All right. So we will continue to take questions for Janelle's presentation at the end. So if you have more questions, you can just put them in the chat and we will swing back to those questions at the end of the session. Thank you so much, Janelle. Very clear and concise based on Marcia Nemard Gordon's feedback. Very clear and concise. Thank you so much for joining us. And we'll come back to you a little later on when we take some more questions from the group here. All right, so we're moving into our second presentation. Remember, we're talking about peace of mind through insurance protection. And we have with us our friend from Kuna, Georgia Morrison. And Georgia would have shared with us a couple of months ago, but she's back today talking about peace of mind through insurance protection. So let me tell you a little bit about Georgia and why Georgia is the person who is here this evening to share with us. So Georgia is a certified financial planner with over 20 years experience in the financial services sector. She's a holder of a Bachelor of Arts degree and a Master of Arts degree from the University of the West Indies, as well as a Bachelor of Law degree from the University of London. Georgia has held various management positions in the areas of retail and corporate banking, business development, sales, and client services. She managed various corporate and commercial banking relationships and was responsible for revenue and portfolio growth, customer retention and satisfaction, as well as originating, analyzing, structuring, and presenting credit proposals for diverse industry segments. She is the Assistant Vice President, AVP of Sales for Jamaica for Kuna Caribbean Insurance Jamaica Limited. And under her portfolio as AVP, she is responsible for the execution of sales and strategy. Welcome, Georgia. We're looking forward to hearing from you. We're talking about protection. So you're going to be looking at the other type of protection now that Janelle did not cover, because Janelle deals with a different type of insurance. So we're handing over to you. So over to you. Let's hear it.
Thank you so much for that very warm welcome. And good evening to all my friends across the various branches and locations of FHC. It's a pleasure to be back with you again in your webinar series. Carlene will be assisting me with my presentation, and I'm just going to dive right into it at this time. Thank you, Carlene. So we're talking about peace of mind through insurance. And when we think of peace of mind, what exactly are we talking about? Peace of mind is, you can move on to the next slide, Carlene. It's that feeling of calm, of not being worried. You know, we went through 2019, and for a lot of us, we thought that 2020 was going to be our year. You know, it was a new decade, and we had all these plans, and we post on social media, just watch me level up. And, you know, we had all those great plans. And then what happened? Income cut and a lot of things, and you know, it affected our peace of mind. So with the panoramic, we have so much to worry about already, and so we are trying to
I think we're having some challenges with Georgia.
insurance is really protection from financial loss. We know that we have various assets, we have, you know, things that we want to protect, and insurance is there as that risk management tool that will help us to get that sort of protection. We use it to hedge against the risk of a contingent or uncertain loss. And I want to touch a little bit on the role of regulation, because those of you who are old enough to remember, Janelle and I are too young to remember, so we don't have all the details. We know that we had challenges in the financial sector in Jamaica, and the insurance companies were impacted as well. But you can have peace of mind, you know, you can have that comfort knowing that the government put various things in place to ensure that insurance companies are on a sound footing. So we have the Financial Services Commission Act, and the insurance companies are regulated by the Financial Services Commission under this act. We also have the Insurance Act of 2001. And under these acts, insurance companies have to provide staff and directors that are fit and proper. They have guidelines for capital adequacy and solvency. They are compelled to have actuaries to, you know, provide certain information. They must have auditors, and the auditors have to report the things that they find. So we should take comfort in the fact, knowing that when we are paying over our premiums to these insurance companies, they are on sound footing because they are regulated entities, and there are certain things that the government has put in place to protect the citizens of the country as far as it relates to insurance. So we're moving on now to talk a little bit about financial planning. As individuals, we have our goals and our dreams and our aspirations, and you know, we have to plan. Each of us have to have our personal financial plan, whether it is a short-term need, a long-term need, saving for our child's education, college. It depends on our lifestyle and, you know, our goals and desires. But the plan would not be a sound plan if you don't have an insurance component in place. So insurance is a critical component of financial planning. Now I'm going to move on to talk about Kuna Caribbean Insurance and our relationship with the credit union. We are the leading provider of insurance solutions for the credit unions, not the general insurance that Janelle spoke about. We look at your health, we look at your life. So CCIJ, which is short for Kuna Caribbean Insurance Jamaica, we were formed by credit union leaders a number of years ago to provide protection for the credit union members because they wanted to ensure that the credit union members had this peace of mind that we all aspire to have. So the suite of products was developed with this in mind. So our products, and I'm sure that a lot of your members, Juven and Roxanne, are very, very familiar with the products, the Family Indemnity Plan, which comes with critical illness rider. We have the Family Critical Illness Plan, the Loan Protection, the Advanced Protector with Credit Disability, Life Savings, and Golden Harvest Savings Plan. Now I'm going to talk a little bit about each of these, and then we're going to look at a scenario. Now, did you know that one of the main reasons why people buy insurance, life insurance, is for a funeral plan? Believe me when I tell you that. Who is going to bury you when you die? How is it going to be financed? Who will bury your parents? Now, back in the days, they had these things called burial plans, where the people in certain church groups or in the neighborhood would get together and they would pool their resources together. Everybody would contribute into it monthly. And they did that because they wanted to ensure that they could afford a proper funeral, because it was unheard of to have a pauper's funeral. You would be the laughing stock of the district if you had a pauper's funeral. So a proper funeral culturally was very, very important. Now, my father died last month. My father died from COVID last month. And persons reached out to me and they called and they were so sympathetic. They were, imagine, you're not even going to be able to do a good send off for your father. Eh? That was all they were concerned about, the fact that I wouldn't be able to have a traditional Jamaican country type of funeral. You know, so culturally, funerals are very important to us. And so the number, it's no surprise that the number one reason why people buy insurance is for a funeral plan. Now, the funeral plan that we have at Kuna Caribbean Insurance through your credit union is very unique in that for one single monthly premium, you can cover up to 6 family members. You can cover your spouse, you can cover either your parents or your parents-in-law or any two of that combination. You can cover your children as well. Up to 6 persons for one monthly premium. That's a very unique feature of the plan. Also, the plan has 7 different plan types. So you must find one that can suit your pocket. And so we have a plan A, B, C, D, E, F, and it goes all the way up to G. There's a different cost for each one and a different payout benefit for each one. And if you examine those plans, you will find one that you can afford. Another unique feature is that it allows you to upgrade to a higher plan type. So you started out with a plan A because that is what you could afford. As your circumstances improve, you can upgrade to a plan B, C, D, E, all the way up to G, where the payout for that is, the death benefit for that is $1 million. No medical is required. There's no underwriting involved in this type of insurance, and so you don't have to go and do a medical and provide us with the medical report and so on. So that's also another very interesting feature of the plan. And for the family indemnity plan, it also comes with a critical illness component that can be added for the primary insured. So if I'm the primary insured under the FIP, I have my spouse and I have my parents and I have my children, I can purchase for an additional small amount critical illness for myself. So in a nutshell, that's the family indemnity plan. And the next slide will show you what the cost is for the family indemnity plan, and you will see that it's very reasonable. And persons say to us that, why are you still selling Plan A and it only pay out $80,000? We would love to stop selling Plan A, but we can't, because there are a number of persons that is all they can afford, a Plan A. And they want to know that they can at least contribute something towards their burial and take off a little bit of the burden of their family members. We know that in recent times, we have seen that, when it comes to funerals, sometimes people have to keep a fish fry, or they have to have a round robin or so on. What happened? Those things can't happen again, because why? We're in a panoramic and they're gathering limits. So it's very important for you to look at the family indemnity plan as an option for your burial plan. Moving on to the critical illness rider, I mentioned that the primary insured could purchase for an additional amount. They can get coverage of up to $500,000 or $1 million. Covers them for cancer, heart attack, stroke, paralysis, and major burns. And again, no medical is required. So I'm the primary insured and I am covered for critical illness, but I also want to cover my family. I'm not that selfish. I have to think about my family too. Plus, if them get sick, is me going cost. So there's another product, Family Critical Illness Plan. And the Family Critical Illness Plan allows you to add family members for additional cost. And you can move on to the next slide, Carleen. For an additional cost, you add family members. And there is, okay, this slide is showing us the cost for the critical illness rider for the primary insured, depending on your age, and the coverage. So we start at age 18, it goes all the way up to 74, but you have to sign up before age 60, and you can get coverage for $500,000 or $1 million, and the costs are outlined on this slide. So we'll fast forward now to the family critical illness plan, where we're going to look at the other family members. We can cover them for anywhere between $500,000 to $3 million. An additional 5 eligible family members in addition to yourself. And as I said, covered up to age 75, but must enroll before age 60. No medical required here again. And you can get a refund of 50% of the premiums if the plan is still in effect and no claim is made at the termination of age 75. Covers this usual cancer, heart attack, stroke, paralysis, major burns, and in this case, we add coma as well. Moving on now to look at the costs involved. We have different coverage plans, 500,000, 1 million, 1.5, 2 million, 2.5, and it's also tied to the age band. So depending on your age, then that will determine the cost that you pay. And all this information is available in your credit union. So when you call tomorrow to tell them that you came to this wonderful presentation and you heard about these things, they'll give you further information and all the forms to enroll and so on. Now you may, go into your credit union and you take out a loan. We know that's what one of the biggest product offering in the credit union. You go and you take out your loan, to buy a sewing machine or to buy your car or, the mortgage, whatever it is that you need. Boy, one of the biggest challenges in life is that, you go and you take on these debts and then you're untimely passing and your family is burdened with the debts because the debt doesn't die with the debtor. So in the credit, on the normal circumstances, it doesn't, but your credit union thought about your peace of mind and they wanted to ensure that your family was not burdened. So at FHC Credit Union, they provide loan protection. So when you go and you take out a loan to buy your car and so on, you are protected in terms of the loan protection insurance up to a certain level. And here again, for that kind of insurance, no medical is required. So we know that, you know, things like our credit cards or mortgages or loans and so on, you know, could be a very big burden for our family when we pass. So we're thankful that there is loan protection to cover that. Now, the credit union pays for that insurance up to a certain level. They have limits. And above that limit, you, the individual, can insure under the Advanced Protector, which is outlined on the next slide. So the Advanced Protector is a member pay product. So if you're buying the car and your loan is 1.2, the 1.2 million is the limit of the loan protection that FHC has, but the car the loan is 1.8. The difference between the 1.2 and the 1.8, you can insure that under the Advanced Protector. So FHC covers the limit up to the loan protection amount, which is 1.2, and then the difference as a member pay product on the next slide, Carleen, you cover that under the Advanced Protector. So it means that on your untimely passing, or if you become disabled, then the loan is covered and the family member is not burdened to have to bear that cost at all. We also have what is called life savings, and it ensures that whatever savings you have in the credit union, and this is very unique to credit unions, because in the traditional financial institutions, you know, if you have a savings account and you pass, then your beneficiary will get what is in your savings account. But with the life savings, your savings is also insured at the credit union. So in addition to the amount that you are saving, you will also be paid an insurance amount. So you can double, you know, the beneficiary will get double what you have saved in the credit union. So that's a unique feature of the product that is offered in the credit union space. And this one is my favorite. This one is my absolute favorite. Juven, you know which one I'm talking about here? The Golden Harvest Savings Plan. Now, how this works, you establish an amount that you want to save towards. So you determine that you want to save 1.5 million, and you work out with your credit union how much you're going to save per month and so on. Let us say you got to 350,000 in savings and you die. Your beneficiary is paid the 350,000 that you have saved thus far, and your beneficiary is also paid the difference between what you have saved so far and your savings goal. So the beneficiary will get the entire 1.5 that you were saving towards. Why? Because there is this insurance protection in place. So this is my absolute favorite product. Now we're going to look at a scenario, and I'm going to read it, and you know, you can put some comments in the chat when I ask the questions. John Doe is a member of the FHC Credit Union, and he's the main breadwinner in his family. He has a car loan and a mortgage with the credit union. He's married to Mary, and together they have 2 children, Ashley, who is in high school, and Liam, who is about to start university. Unfortunately, tragedy struck. John and his dad, age 72, and his daughter, Ashley, all died from COVID-19, and his wife, Mary, suffered a stroke. Let's explore the peace of mind that the family could experience at this time. Now, we have 3 persons who have died here. On to the next slide, Carleen. We have John, his daughter, Ashley, and his dad. His dad is missing from this sentence. Anybody can tell me what could possibly happen here? Very easy and simple. Remember, we spoke about the funeral plan. We spoke about the burial plan. If John had a family indemnity plan, he could cover himself, he could be covered, his dad could be covered, and his daughter could be covered as well, because Ashley is in high school, which means she's under 26. Now, if he had a plan G, if he bought plan G, right, which for a single premium of a little over $5,000 per month, how much money would he be paid if he had a plan G and all 3 persons were covered under the plan G? I want somebody to tell me in the chat. $3 million, that's correct. Why? Because everybody who is covered for the 1 monthly premium, you can cover up to 6 family members, yourself and 5 others. And in this particular case, the dad is eligible because he's below 75. Ashley is eligible because she's below 26. And so the payout benefit for them would be $1 million each. What would happen to the car loan? Would the wife have to assume that debt? Remember, the credit union offers loan protection. So the car loan, that's right, K. Brown, loan protection. So the car loan is covered under loan protection. So the insurance would chip in and pay out the car loan. So the wife would not be burdened with that responsibility. What about the home, the mortgage? Also protection in place. Also protection in place, so that the wife would not have to, assume those responsibilities. The son, Liam, who is about to start university, what sort of protection could possibly be in place there? Let me hear from somebody in the chat. Liam is about to start university. All right, so remember, I told you that my absolute favorite product was the Golden Harvest Savings Plan. Now, because John was such a responsible dad, he had been saving towards Liam's university education. So he had taken out a Golden Harvest for Liam's university fee. So he was saving towards $3 million to pay for Liam's university, but he only got to a certain point. Now, the entire savings amount would benefit from this insurance, because the difference between what he had saved and what his savings goal was would be paid to the beneficiary. So Liam could still go to university if John had a Golden Harvest savings plan in place. What about the wife, Mary, and she had a stroke? Not the critical illness rider, family critical illness plan. Remember the critical illness rider, John could only insure himself under the rider, but there was also the family critical illness plan where you could insure other family members. So they could benefit from that as well. Is there anything else that they could get protection from and peace of mind at this time? Remember, we spoke about the life savings. So outside of the Golden Harvest Savings Plan, if he had savings in the insurer, in the credit union, it would be covered on the life savings, because the credit union offers that automatic coverage. So you see that there's a partnership between Kuna Carbon Insurance Jamaica and your credit union, the FHC credit union, to provide you with this comfort and this peace of mind in this time of panoramic. So in closing, I just want to say that we do not know when we will be checking out of this life, and the unexpected circumstances arise. And so being prepared for that can be comforting with the knowledge that our families will not be burdened with these kinds of expenses when we pass. And that takes me to the end of my presentation. I thank you so much for your attention, and I am now open to answering any questions that you may have at this time.
All right, so what a wonderful presentation. What a wonderful presentation. Thank you so much for that presentation, Giorgio. Very clear, very concise, and I'm sure that it has persons on this meeting really thinking about insurance. I know I saw questions coming in for you. Let me just scroll back up the chat. Okay, so Claudette is asking, can you add the critical illness rider to an already existing plan, and how much would the addition cost? Can you add the critical illness rider to an already existing plan, and how much would the addition cost?
All right, so thank you for that question, Claudette. Yes, you can add the critical illness rider to a plan for the primary insured. So if it is your plan, you can add it for yourself. If it's your husband's plan, he can add it for himself. So if it is your plan, you can add it, and the cost is tied to the age, to your age. So there was one of the slides in the deck showed the different age band costs. I don't remember them off the top of my head, but I can tell you that, well, Carlene has the presentation, so, you know, she can share it with you guys when you visit the credit union tomorrow when you call in. But it's not very expensive. If you remember from the slides, it's not very expensive at all. Let me see if I can just bring it up on my screen and tell you. All right, it's best you get it through your credit union. It's a bit cumbersome because there's 18 to 29, and if it's 500,000 or if it's $1 million, there's a different cost. Then 30 to 34 is $155 if it's 500,000, $310 per month if it's 1 million, and then you have 35 to 39. So they have many different age bands. So it all depends on your age. So it's best if you call the credit union tomorrow, tell them your age, indicate if you want 500,000 or $1 million, and they'll tell you the cost based on your age.
Okay. There's also another question. Yes, Janelle is asking a question. So Janelle wants to know if you have a pre-existing condition, example, cured cancer, can you purchase critical illness?
All right, so there's a questionnaire that you have to complete. And when you are trying to enroll for critical illness, and then once you complete that questionnaire and you submit your enrollment, the underwriters or actuaries will make an assessment. It's a health questionnaire, so it asks I think it's about 4 questions. So they'll make an assessment and you'll be advised if you are approved for coverage.
Thank you for that. Natalie is asking, what would happen if the father was above 75?
If the father was above 75, he would still be paid out the benefit. The important thing is for him to enroll before age 75, but you stay on the plan for life. That is the family indemnity plan. The family indemnity plan, you stay on it for life, but you enroll before age 75.
Okay. Michelle Smith is asking, can the slides be shared with the members via email? Sure, we can share the presentations with you. So we will do that. By tomorrow, you should get the slides. Are there any other questions? Questions for Janelle on her presentation? Are there Any questions, more questions for Georgia on her presentation? Annette Adams says, I am a member of another credit union with a FIP plan. Can I purchase another Kuna plan at FHC?
All right, she said another Kuna plan, as in another FIP plan. You can only have one FIP plan. You can only have one. And I just want to share something else that we have seen from time to time. Siblings trying to cover the parent. You can only have one FIP. So if I have covered the parent under my FIP, my sister cannot cover the parents under hers as well. That's duplication of coverage, and that is not allowed under the plan.
Okay, so no duplication of coverage can be allowed. Are there any other questions? Noted, Annie. Are there any other questions on the family indemnity plan, on the Golden Harvest savings plan, family critical insurance plan, on the riders, life savings insurance protection, loan protection insurance, motor vehicle insurance, homeowners insurance, all risk insurance? What did I leave out?
I just want to
There's a raised
add,
hand,
Juve.
Claude-
Go ahead, Georgia.
All right, somebody is asking if the
There's a
other
raised
siblings,
hand.
If the other
If the
sibling does not know about the policy, will the application for the new one be stopped?
all right, so when we receive the application for the new one, we do our checks, and then we would advise you that, sorry, Juven, you're unable to cover your mom because she's already covered. That's as much as we say. We're not going to tell you which one of your siblings cover her. We just say, unfortunately, mommy is already covered, and so we will just have to deny your application to cover her. Right.
Okay.
Juven, there's a raised hand from Claudette.
There's a raised hand from Claudette.
Yes, maybe she wants to ask it verbally.
Okay, Claudette, would you like to ask a question? You can unmute and go ahead.
Sorry about that. I can't type fast enough.
Okay, go ahead.
All right. So I have a FIP. What happened? My daughter will be coming off at age 26. When she
Yes.
comes off, she will open a plan to put me on. How long will be the waiting period, and what will happen to the plan that I now have?
So she can open a new plan and transfer you to her plan, and you won't have the 6 months waiting period, because in your instance it will be a transfer.
Okay, thank you.
Yes.
Okay. Walter is asking a question. What do you say about credit union Gold Series insurance? The Gold Series insurance is the health insurance plan, which is a different insurance offered, Walter. It's not offered through Kuna. This is the health insurance plan, the one where you would actually use your health insurance card and go to the doctor for your prescriptions, etc. So Kuna does not carry that insurance. That insurance is provided to credit union members through another service provider. So that's not the one we're addressing today, but you're asking a good question. So for one of our other webinar sessions, we could actually invite that insurance provider to come and talk about health insurance. Annette says, maybe I will purchase another Golden Harvest. Very good, Annette. We all have different goals. So nothing is wrong with having more than one Golden Harvest savings plan. EW says, tell us the premium for the Golden Harvest.
The Golden Harvest premium is paid by the credit union, so it's not an additional cost to the member. Am I right, Juven?
Right, the insurance part.
Right.
Yes.
Right. So it's a benefit that the insurance that the credit union provides to the member So the premium is covered by your credit union.
Okay.
Mhm.
Yes, Marcia Nemhard, she says, I love the Golden Harvest. I want to try it. We will definitely be in touch with you, Marcia. Winsome Palmer is asking, can you have an investment added to the plan? Which plan is that?
No, okay, so I know what they're asking. There are some insurance products that has an investment component. So you pay the premium, it's a life insurance, and then there's a portion that goes to savings, and sometimes you can take the cash value from that. Our product at the moment it does not come with that investment component. We do frequent reviews on our products. So from time to time, we look at it and see what can be added. And at the moment, we don't have that. And, perhaps in the future, we may add it.
Okay. Joy Grant says, did you say that the maximum age for children on the FIP is 26? So Georgia, I'm going to ask you to confirm that and to say why 26.
Yes, because after 26, them a big man and woman, and they must take out their own insurance.
They start having families too.
They start turn their own key and them finish college and university, and them a work and do their own thing and so on, So they take out their own plan when they get to that stage.
All right. Okay, and Marcia Nemad is having a field day. She's laughing with that answer, but it is true. They're all they're heading towards 30 now, so they have their own responsibilities now. Thank you so much for that. Are there any other questions? Okay, one last question we'll take coming from Claudine West. My sister lives overseas and would love to have a FIP plan. However, she is unable to travel. How can we help her?
Is she a member of a credit union?
No.
Claudine says no. Okay.
Sorry, may I say because of the pandemic, I'm sorry, I should have raised my hand. My apologies.
Go ahead.
Because of the pandemic, she's fully vaccinated now, but she's been wanting to do this thing. And I've been trying, but I'm told that she has to physically come to the location and sign documents and so on. But for her to travel to Jamaica right now, especially now, it's just not feasible for her, right? So I'm hoping, seeing that the Prime Minister made some statements about 8 days quarantine if you're fully vaccinated after being vaccinated 2 weeks. I don't know when she'll be able to travel, but I know between now and when we're fully open, does FHC have any plans to look at some of these products that you have that persons overseas want to make use of some of these opportunities, but we're being told, or they're being told, that they have to physically be in the location. Even registering companies overseas, they take notarized documentation of their IDs and documents and so on. Why not FHC? Why not any credit union? Because you're all saying the same thing. Please help.
Okay, Claudine, it is something we will look into, and we make note of your name. So we will look into it and have more conversation with you off air. All right. So Janelle, I'm going to throw it back to you. I'm going to ask you to just throw out a question from your presentation, because we have prizes. We have a prize from Kuna, we have one from ICWI, and we have one from FHC, or see you had asked a question earlier. So we'll take the questions in this order. Janelle, Georgia, and then we will go to the FHC question. So Janelle, is there any question that you would want to throw out to the participants? We have a lovely prize from ICWI. The first person to put the answer in the chat that is correct will win the prize.
Okay, exciting. All right, so I spoke about our newest offering, the Comprehensive Complete. Can you tell me 3 riders, individual riders covered under the Comprehensive Complete bundle?
3 riders covered under the Comprehensive Complete bundle. Junil, I hope this question not too difficult, but I know how our participants are. They're always taking notes. Okay, so Kay Brown says key replacement, capped excess, alternative transportation. Is that correct?
That is correct. Oh, I feel
Oh,
so
they're
good.
very good at taking notes. Congratulations, Kay Brown. I think we have your woohoo. I think we have your information and we will make contact with you. So Kay Brown is the winner of a lovely gift from ICWI. Georgia, over to you.
I'm
Your
going to
turn
make
to
mine
ask
an
a
easy.
question.
I'm going to make mine an easy question. How many plan types are there under the family indemnity plan? How many plan types are there under the family indemnity plan?
Ooh, and they're coming fast and furious. Claudine West says 8. Whew, my screen is just moving.
It would be the
Claudette,
first.
Claudette is the winner.
Claudette says 7.
That's correct. 7.
Right. But Claudette, we need to have your full name, etc. So Carlene Coley will reach out to you in the chat to ensure that we have your full name so that we can make contact as well and give you your lovely prize from Kuna. Congratulations. And then our CEO had asked a question earlier. Ms. Linton, are you still with us? Ms. Linton had asked a question. Oh yes, she is here. Go ahead, Ms. Linton, remind them of your question.
Right, so members, I just want to have someone identify themselves if they've been here for each of the sessions over the last 3 webinars, the Habits series. Anyone who has attended all 3 sessions.
Claudine West says, I have. Claudine West is the first person to respond. So Claudine, maybe you can just tell us, maybe if you would like, you could turn your microphone on and just tell us the topics of the 3 sessions that fell under the Habits series. Okay, or you can type them.
Okay, let me type.
Okay, so she's typing. Okay, Simone Ball, we see your comment. We will ensure that we send you a copy of the presentation. And thank you so much for joining us. We understand you have to go to another meeting and you're really grateful you're registered for this webinar. We hope you will join us for other webinars, Simone, and you will bring some of your family and friends and co-workers and your church brothers and sisters and people who you know who would be interested in getting information on a monthly basis based on the information that we share within our webinars. Okay, so Claudine says, managing your debt, insurance protection, and what's the third one, Claudine?
We should have a time limit, Juven.
Yes, we should. All right, so still waiting on Claudine to tell me the third one. Wendell Wilson had also said that he participated in all 3. Let us see if Wendell will come in with the 3 topics before Claudine comes back with the third one. Wendell, giving you a chance. Oh, Claudine came back and Claudine said savings. New goals. All right. Thank you so much. So Claudine West is our winner. Claudine, we have a prize for you. Compliments of FHC, compliments of your credit union. All right. Thank you so much to our presenters. I think they did very well. They were very clear. And we also want to thank you all for participating. The engagement was good. And we promise you that we will definitely share the presentations with you. We also want you to engage us. We want you to have more conversations with us. We'll be calling on you to have more conversations with you too, because the products and services that we offer at the credit union are very good. They're very beneficial and they will offer you peace of mind, not just the insurance products, but basically all of the products that we offer at the credit union can offer you peace of mind. So choose us. Let us be your financial partner as we put our members at the center. So on behalf of my team, our CEO, our other team members at FHC, I want to say thank you so much to our presenters for joining and sharing tonight. We want to say thanks to all the persons who participated. We look forward to having you join us every month where we have our webinars. We will be sharing a questionnaire with you shortly, and we just ask you to take a little time, complete the questionnaire, and share with us whatever the topics you want us to discuss so that we can actually work with you. So we thank you so much. It is 7:31. It's heading into curfew time, and we want to ensure that those persons who need to get home safely, and there are no challenges with the law once you leave your office or wherever the space is that you are joining us from. So on behalf of your FHC family, I'm Juven, and I say thank you so much again for joining us, and we look forward to having you next month. Have a good day. Thank you. Bye-bye.
Bye, everyone.
Bye, Georgia. Bye, Janelle. Thanks again.
Thank you.
Bye.
Bye. Good night.